This episode is distributed for general information and educational purposes only, and is not intended to constitute accounting or investment advice. The information, opinions, and views contained herein have not been tailored to the investment objectives of any individual. All investment strategies and investments involve risk of loss. Nothing contained in this episode should be construed as investment advice. Any reference to an investment or potential performance is not and should not be construed as a recommendation or as a guarantee of any specific outcome or profit. Any ideas, strategies discussed herein should not be undertaken by any individual without prior consultation with a financial professional. The Questionable Behavior Podcast and Jonathan Libby of Steadfast disclaims any liability or loss incurred by any person who acts on the information, ideas, or strategies discussed herein. Welcome to the Questionable Behavior Podcast. Please don't forget to follow us on Instagram at _QBPCO. Also give us 5 stars on all your favorite podcast platforms. Subscribe to YouTube, all the good stuff. We got a very special episode today. We have a crypto expert, in a sense, Jonathan Libby here from Steady State. How you doing, John?
Doing good, man. How you doing?
Good. So just to give people a little bit of a background, you're basically a crypto genius because of the fact that what you guys are doing with Steady State, you guys are, in a sense, breaking the market and doing something completely new that's not really there right now. In the way that your insurance around crypto and everything is working, which we'll get to. But at the same time, I want people, especially the creatives that follow the show, to kind of get a little bit of background on crypto and how some of that stuff works, because everybody's invested, but they have no idea what they're really putting their money in. So with that being said, John, I want to start with your background. Your background is basically on finance and insurance.
That's actually a lot of my background. I'm a big old finance nerd. I think when I was young, I wanted to be a musician, and then as I got older, I ended up somehow ending up liking business. I don't know what kind of shit that is, but
well, you're on the right show for a musician. But if you want to sing a song by the end of the show, we got you.
Yeah, right. So I guess what my background, is I started working in insurance in 2017, and before that, I really started falling in love with finance and consulting and really solving problems. I thought finance was one of the things I really wanted to learn because I really want to understand how the world and how people in the world work. And I found the best way to understand how people work is think about what drives us. Ironically, I think money is one of the biggest driving factors in how we function. So I thought if I could understand that, and maybe a lot of philosophy behind money work, a little bit of philosophy, I could understand just how things work in general. And that was kind of my goal, what kind of drove me into finance originally, was really that philosophy of just like, I want to know how the world works. Yeah. And, from diving into that and going to that, eventually I learned, got to do some, I got some banking background. I got a background in insurance and entrepreneurship. And kind of eventually I was introduced to crypto and decentralized finance in the fall of 2019. I met one of the original founders, one of the original, I guess you can call them DeFi protocols. Okay. And it blew my mind as a finance nerd how these things work. When I saw they built these people that built interest lending platforms, how in banks you get like 1% interest in your savings. They built something that can give you like 8%, and it pays you by the second rather than by like the annual. And when I read that, I thought it was a freaking scam. I'm like, there's no way. Yeah. And the more I researched it, I realized, holy crap, this works, and this is real, and this is the future. Yeah. And I've watched my background in finance, realizing this technology, this new technology was the future, kind of helped me realize like this is going to marry finance in a way and technology in a way that we've never seen possible. It's almost impossible in traditional finance, and it's actually going to, I think, transform how much money we make individually and globally. And I want to be a part of this future because I want to make sure, no one has to deal with poverty. And wealth equity is something we can all achieve by doing things we love or enjoy doing. And I think solving people's money problems is how we get there. And that's why I'm part of DeFi right now. Yeah, and
just decentralized finance in general, which for sure it's DeFi for people that don't know, is kind of it's basically cutting out the middleman in a sense. Every transaction now that you do with a debit card, credit card, whatever, you're basically going through a bank, and then that's how you're purchasing everything. But this is cutting that out completely, and you're just directly taking money from person, giving it to another person, whatever institution, etc. So let's talk about just some of the risks in general in decentralized finance, because now you don't really have any protection. You have this freedom of sending money back and forth, but you don't have the protection, any sort of like stable bank or something helping you in case of a fraud or stolen money, whatever the case. So tell me just some of the risks that people may not know about.
Well, I think a lot of the risks are there. First, I want to say, because it's still an early industry. This is like the Wild West in the internet back in the 90s, when no one knew what the internet was, and we slowly started learning it. And back then it was very, very dangerous to be a part of, what you're doing. Phishing attacks, and a prince from Somalia needs $1 million, and you would actually give it to him,
Yeah.
And so we're kind of in that phase. So there's a lot of risk available right now working in the industry that I don't think are going to be there a couple years from now. I think one example is what you're saying is like how we figure out what money is with these digital wallets, and we have to someone has to give us their digital wallet address to send money. Right. I have had so many scary moments where I try to send the digital wallet address to another address. And then after I sent it to the digigital wallet address, like I'm scared that I sent it the right one. Did I just lose $500? Or something I sent over.
You don't even know. Like, did it get there? Did it not?
It's like, oh my god. Yeah. And that's something you kind of learned early in the space. And like another thing you kind of learn to understand in the industry is like another big fear is if someone gets a hold of your password, someone gets a hold of your keys somehow, they can take the money. Right. And that's so rare, but when it does happen, it's devastating to a lot of people if they're not careful. Now, I don't think a lot of those fears are going to stay over a long period of time. I think a lot of these will eventually evaporate. We'll get better systems and better UX and UI, but they're still very apparent right now, and it's very scary if you're not careful.
Yeah, so basically that key holds everything for you.
Money.
Yeah. So tell me, like, normally people, especially in the beginning when crypto was first, getting big and Bitcoin was starting to first make its name, people in traditional finance were right away just like, oh, this is not going to work. It's only going to last for so long, et cetera, et cetera, et cetera. So you coming from a finance background, instead of taking that negative approach and just not believing in it, you actually were intrigued and you're like, oh, I need to do this more. So tell me about your thought process when you first came across it, and what made you actually put your own money behind something.
I first came across Bitcoin, Ethereum in 2017. I had a period of skepticism myself when I first saw it, and I kind of watched that, talked to a lot of finance people. My response originally when I first saw crypto was not a total ignoring it. I thought it was very interesting. And I thought because it was interesting, I was thinking, maybe there could be something here, but I'm going to sit back and watch. And eventually, I really, again, got reintroduced to this stuff. I was aware of it. I could talk about it. I kind of understood it. I found it interesting. But I didn't realize, I think you start really understanding it's valuable when you start seeing that utility. And utility is, someone hands you a guitar. Cool, it makes sense, it's interesting. When you watch someone play a guitar and the real utility behind it, you're like, wow, that's beautiful. When you actually start seeing what they can do, you're thinking, if in the right hands or in the right use, it becomes very powerful. And I think that's kind of the same thing with cryptocurrency, where it was interesting. And then again, that fall of 2019 introduction, I started seeing what the use case could actually be, rather than being able to talk about it like a nerd and actually know what the heck I'm talking about. I got to first time actually see how it could be used. And when I saw how it could be used, I realized, that was my own, oh my God, moment was sold. It was very quick. So, I think we all have that moment. We see something, we don't understand it, and we become skeptical about it. Right. I love talking to those guys at the bar nowadays. They're like, oh yeah, Dogecoin. I own some Dogecoin. And I'm just like, dude, you have no idea. There's a whole new world out there. Yeah. And you can think about your Shivas or your cat or your dog.
Yeah. I'm not gonna lie, I definitely put some money in Dogecoin, but early.
I actually made if you check my Twitter of June 2020, I think I posted a trading strategy on Dogecoin in June of 2020. And I look back if I actually followed that strategy, I look back and I'm like, oh my God, I could have made Steady States. I'm tired on this stuff.
Interestingly enough, I saw it hit like 2-3 cents, and I was like, oh shit, it came from like 0.001, and I'm like, you know what? Let me go and let me buy some, and then I go and I see I'm looking, I'm like, it says I already have some. I'm like, when the fuck? And then I realized I bought it in like March of 2020 for some reason, God knows why, and then all of a sudden, and then I'm checking in like 2021 when it's hitting like 3 cents. I'm like, holy shit! I'm like, I got money. Like I didn't even realize that it was there at all. But
the Dogecoin dip of 2020.
Elon Musk, man, he set that on fire for a little bit. I need a strong enough Twitter account where I can just post the coin real quick, make myself some money.
You got the SEC knocking on your door, sir, that's not okay.
yeah, literally.
What's up, everybody? This is your host, Edison. Thanks for tuning in to the Questionable Behavior podcast. Please don't forget to leave a like, subscribe to our channel, and also hit that bell on your way out so that you get notified for every new episode. Thanks again for tuning in. We couldn't do any of this without your help and support.
So going back to that, how did you come up with the idea of Steady State now? Like when did that start clicking that you wanted to kind of be involved business-wise in this industry?
Well, it came in layers. So I really knew DeFi was where I wanted to be long-term. Was in the summer, I knew I wanted to be in crypto. Fall of 2019, I knew I wanted crypto. I knew I wanted to be part of DeFi. I watched some new protocols we built, particularly one called Untitled Finance. And after watching how they work and they function, I had a conviction that I need to be a part of the space. And I had to figure out, how do I get there? And so my thoughts were like, I did my due diligence, my time, started exploring what's my background and where can I actually contribute to the space. Ironically, it didn't begin in insurance. I put together a lot of different financial engineering trading strategies. And later, I was through those strategies. I would just post them on governance forums, like, hey guys, like basically Reddit, and be like, I think this idea works. I think this idea works. I think this idea works. And eventually, a co-founder at an up-and-coming startup, they're probably at $500 million, I think, right now in AUM, less than a year being out. It's pretty impressive what they're doing. One of the co-founders hit me up. He's like, hey man, I've noticed a trail of things you're posting. Can we jump on a call? And I jumped on a call with this guy. Okay, and he basically we went back and forth. We really enjoyed our conversation. And then basically after that, we eventually met again. In fact, we stopped talking, and he met again in February after their token launched and product launched. And after that February meetup, this guy, very famous person in the industry named Tim Frost, and a bunch of other people started meeting me, and they were like, okay, this guy's young. We're going to take a bet on him. We need insurance. Can you build an insurance solution for us? And kind of Steady State came in layers where a bunch of guys took a bet on me to build a solution. And I had basically 2-3 months to build it. And so I built one iteration. They were like, push it farther. Build another iteration, push it farther. But the third, they're like, oh my God, he got it. And like it came in layers. It really started in August last year, got put on pause. I put together a whole white paper on building this new concept for a new kind of financial market. And that concept eventually got applied to insurance.
So just from like you kind of posting your ideas on investment strategies, not even insurance strategies at that point, right? It was just kind of just investment strategies over and over. And he's like, hey, by the way,
a multi-$100 million company in less than a year, hit me up and finds this random nerd on finance posting weird stuff online.
He's like, hey,
and,
wait a minute.
And my joke is like, you'll never find me because it was an anonymous account, and you'll never actually know where that trail is. But maybe one day you'll see Steady State, and 4 years later, find this looks interesting. This
guy right here. And then how did you kind of let them know that insurance is your background, and that how did you start getting this concept of like just insurance around the DeFi altogether?
The funniest part about the insurance background is the co-founder that asked me to build the solution originally didn't know I had an insurance background. Like, hey, we need an insurance solution. Can you build something? You seem smart.
So it was just random. It's like, oh, it seems like you might be able to do this. Here you go. And you're like, wow, that's like, my background.
I'm like, yeah, sure, I'll give it a shot, bro. My background was insurance, so it actually helped out a lot.
Did you let them know after or no? Or just at the end?
They found out. Yeah, they actually all found out later when the smart money in the company started asking me actual questions. They were like, okay, this kid actually doesn't know what he's talking about. But like people that actually called me originally were like, yeah, you seem smart. Can you figure this out?
Yeah, can you figure something out for us? So, what I understood from Steady State is it's kind of it's helping people kind of not lose a lot at one certain time in regards to the decentralized finance in general. And right now, if I feel like, if I'm invested, I have to kind of go and get insurance on my own, versus like if I have a bank account, the bank backs me up for X amount of dollars for fraud or whatever.
Exactly.
So tell me how you put that idea together and all that.
So insurance does exist in this industry of DeFi, this decentralized world. And basically how it works currently is the only insurance available is for retailer. If I use a protocol, if I use a system, I can get insurance for my exposure to the protocol. And basically what that means is if I use this protocol, I get this kind of whatever kind of insurance. Let's say I say if the smart contract, the code gets hacked and the money's stolen, I can get coverage for that money that's stolen, say potentially, protected for $1 value. And how it kind of works currently is people put money into this insurance fund, and when the event happens, I go to these people to give me my money. If I've lost it, I get insurance with them, and they vote on whether or not I get an insurance payout. Oh, okay. So it's kind of an odd system they have built out, and it's had really mixed results. The approval claims process is like 18%, and it makes sense when you think about it. Wow. Like, why would you and I come together and vote to give someone our money? Right. And even though we say promise them that, and the only way to do that is through trust. So, and I kind of looked at it, and I looked at the model, and I'm thinking, no wonder. There were two major problems I saw. Is this model seemed fundamentally broken to scale at a long-term level, and the other problem is you're getting insurance for your exposure to the risk of the protocol, but there's no way for the protocol to get insurance themselves for the same risk that they're responsible for. And so I'm like, wow, there are two fundamental errors in the system that I think really need to be solved when I started doing my research. And where it came back to is we tried to create insurance for these protocols, these DAOs that come together and get to protect their community. And the kind of risk you're trying to get controlled or get protection from, a lot of it is on like on-chain public data, and you can create a criteria to know what data, like what kind of event it is based on public data. And if you can have something detect and translate that data to like a smart contract, you no longer need people to vote on a code. You can have that like some kind of technology go in and take the data, say this,
and so the data is basically showing exactly how all these different do I say coins? Do I say decentralized codes? How they're all failing, etc. And you can kind of, or you have created something that kind of picks all this up, so it kind of can catch it before it fails.
It can determine after the failing that something failed and what kind of failure. And if the protocol gets it hits the criteria, it just pays out the protocol. Right. So it kind of tells two systems where protocols can finally take care of the key themselves. Because you and I, we are not smart people. At least I know I'm not. I'm not going to get insurance for my exposure, everything. So I'm thinking that what are the odds it happens? And then it happens. I'm like, crap, But if you hear the protocol's insured, you're going to start asking, is the protocol insured? You'll be asking that. They can pay the premiums on their protection. I don't have to pay my premiums. We're going to think.
So the protocol itself would get insured, so that if they do fail, they'll end up getting the money back by their insurance. So the case. So it's kind of like the what's the FIGC? Is that what it is? That backs the banks up if the bank loses the money. FDIC. Yeah. Better. You're the finance guy.
We do something even better too on top of that, where the protocols can actually trust it. Our claims approval rate won't be 18%. We're going to track the public on-chain data, and if the event happens, we're going to create payout on event. If it doesn't, they don't get payout on event. It's public. There's no people interacting with this model, and suddenly you turn it to a market, and something that both parties can trust well. And then we take the risk, and we don't have a $500 billion portfolio, and we turn the actual risk into a safer way to use DeFi than actually interacting with any protocol.
So, in that sense, is this more for like a protocol itself for one of these companies, or is it for a consumer like myself who's trying to get their investments protected? So Steady Fast would work for both people.
The protocol will get protection. The protocol will get protection. But here's the thing. You're new to DeFi, or there's a lot of things to use in DeFi. If you start launching in space, there are I feel like 100,000 protocols. Like, how the heck am I going to figure out which one to use? Right. If I don't want to use them and I just want to buy their token, how do you know which token to buy? I have no clue. Yeah. And so our view is these protocols are going to pay a pretty high premium, like 10-20% to get covered. We're going to take the risk and build these kind of new products, basically, with weighted exposure per protocols, where you can buy in. Okay, you don't know a protocol. You know, if you put $1 million, you know, in any of these protocols, even if they're not insured, let's say, if they're not insured, maybe if they are insured, you're at risk of maybe losing that $1 million before the day is gone. It's a scary world right now.
Yeah.
And you're trying to get maybe a 10% rate of return on their token. What if we can get you a higher rate of return in their token, a bunch of tokens, and while also controlling your risk of loss? And ironically, it's by buying the risk. We're going to build a pool.
So the pool is going to have a bunch of tokens in a sense, like in comparison to stocks, like an index fund in a sense, or no?
Almost. Here's what's kind of more interesting is you're buying a pool with your exposure, like a 1% weighted exposure. So if an event happens, rather than say like, you know, put $1 million in this investment pool in DeFi, you lose $1 million. You'll lose maybe like 1%. But your upside, let's say, is 20% and 100 tokens. And so like the index fund, you buy a token or a stock with exposure to like 100 stocks. Yeah. Rather, you're going to buy the risk of limited downside exposure and say get a 20% rate of return of accumulating all 100 stocks. So it's like the first ever kind of like you're going to get something that's going to pay you in a stock or pay you in the token. And that makes it really interesting.
Whereas so over time, if you're putting your money in, it's actually growing at the same time as it's protecting you. So even if you like you're losing out, you lose that 1%. You might by the time if something fails and you lost that 1%, you already gained X amount. So it's at the end of the day you still end up with a profit. 18%.
Yeah, and those tokens have moving value to the US dollar. So if you stake 100 DAI or 100 USDC, and this rate of return, if you buy Solana, say you buy the risk of Solana, okay, in this pool, if your portfolio, your Solana return to like say a 20% rate of return in Solana for covering the risk back in January would be like 900% return.
Wow.
You know, and you're taking. I
should have met you back.
And you're just accumulating the tokens, and you don't know what token to buy. Let's say, so if you're just bringing 100, and you know, like, oh crap, this token just went up 100x. Hey, I actually have some. Sell it. You know, it's like whatever. You know, and it's rather than trying to guesswork and trying to pick the winners, you're just gonna pick all of them because you know long term. If you're long DeFi, you're long this decentralized future, then why not just get every token? And that's my view, and it makes sense to me.
You kind of just invested in the whole market in general. So
just invest the whole market.
Yeah. So essentially, it'll be like different pools of different tokens or whatever the case.
Yep.
And you can, let's say I wanted to get involved today, I can kind of go and pick which group I think is better and just put my money towards it. My money will be protected. At the same time, it'll also grow at a constant rate.
Exactly. And that gets really interesting, right?
So if I wanted to invest today, how do I do that?
Oh my God, we're not launched yet. We're not going to be launching our protocol.
So when is the launch date?
Q1 20. Yeah, so Q1 2022, the future of the industry shows up. Okay. We're going to be launching then. When it comes to getting involved, man, we have a website, Steady State Finance. Steady State DeFi is our Twitter. Steady State DeFi is our Telegram. You know, good ways to get involved, start learning about we're diving into the details. We're still heavily in the building phase. We're locking some pretty amazing partnerships. I think our biggest partnership is, I guess our integration, we call it as Chainlink. And that just shows the kind of power we got behind us. It's one of the largest names in the industry is like these guys. And because they get it. And, you know, so there's a lot of exciting things happening in the back office. We're building our product. We're locking in more and more power players every single day on the product side. And like, I'll tell you what, once this is built, it's going to be exciting for everyone. It's all about how you market it. But could you imagine buying the risk of a protocol is going to be safer than just using the protocol themselves? Like,
instead of me having to go and buy 20 different coins, a little bit here, trying to figure out and trying to be Wolf of Wall Street for like a day, I could just go and it'll be like a safer bet. Leave the money and don't think about it for a little bit. That's the other funny thing. It's like now, you know, with the market, just with it being a bull market, you have all these new experts coming to Instagram and YouTube and like, look, I told you to get this coin. I told you to get this coin. You could have told me to get any fucking coin at that point. Everything went up. You know what I mean? Everything's going up. Oh, you're a genius. You know?
Now you're just gonna put money and chill.
Yeah,
you know,
exactly.
And it's better than an ETF because you buy a token, like a token with like exposure to a bunch of tokens. You're gonna put money into a pool and just receive a bunch of tokens at a fixed rate.
Yeah,
that's amazing.
So now when it comes to withdrawal, because each token I guess has their own wallet. So when it comes to like the withdrawal process of that, do you have to kind of go and do you have a wallet for each token, or how does that portion of it work?
Yeah, so this could, I didn't know we were going to do something like more. This is kind of complex, so hopefully I can keep it simple here. So, the hard part is figuring out how do you figure out who's receiving the premiums, okay, who's receiving their APY. And so if I stake 100 USDC into this model, like $100 or 100 DAI, how am I going to make sure that like I receive the DAI? Our kind of strategy is we're going to give you like a synthetic token, so like something representing your stake, so like a $1-for-$1 value,
Right.
and whoever's holding that $1-for-$1 value at expiration receives the premiums, and the premiums are received like hourly by the second. So whoever holds us in the wallet will track, and like premiums are going to feed in. So you're going to naturally see your wallet, with gas fees under control, you're just going to see a bunch of like tokens just popping up in your wallet constantly.
Right.
And as whoever holds it, so if you give someone 50. Suddenly, like when that 50 split happens, and someone else is receiving all those tokens, you're receiving a half of the tokens. So like you're receiving 20% now, let's say on $50 rather than 100. But when that split happens, it'll naturally just split up.
Yeah.
And that's kind of how we're doing it. Is like, and then when you want that 100 DAI back, at the expiration, you can just go in and give your 100 DAI back and receive the original DAI, and you can go and trade that around. Yeah. And what we're planning to do with that actually is make it. I'm not sure for users, but like there are decentralized exchanges people can trade dollar for dollar coins for. What this allows is for this exchange now to actually be utilized to trade. So you could actually buy like 100 USDC of like these synthetic USDCs and then go and sell them for the actual $100 USDC. And a decentralized exchange could actually now accumulate the returns for staking the risk. It gets like really interesting. It gets really complex, really interesting, but it gets like really fun when you really think about it.
So is it in the sense of like, all right, I can take out money anytime I want, or is it kind of like when you stake a coin, you kind of only have certain periods when you can pull money out?
You stake your coins, you receive a synthetic coin, and you can buy and sell and trade that synthetic coin on a decentralized exchange and make it liquid without ever sacrificing the initial $100 stake.
Oh, okay. Wow.
So that makes it attractive for both people. Currently in the industry, say there's a big godfather in this thing called Nexus Mutual. Now I love Nexus Mutual. It's the retail insurance. If I stake my Ethereum in there, it takes 90 days for me to get my Ethereum back. Every model for people for insurance, it takes 30 to 90 days to unstake your whatever token you want, and that's ridiculous. When you want your money back, you need your money back now. Yeah. And the problem is staking insurance pools. What they need is these guys need to generate enough capital to replace the money unstaked. And that's why it takes so long to replace and move things. My thoughts, if you think about markets where you can trade around risk, or some kind of risk, I always thought about like a bond market, where if a business gives $100 million of bonds, I buy a bond. I don't go buy and sell that bond. I go trade that around in a secondary market exchange like Robinhood or TD Ameritrade. And I'm thinking we can do something similar to that, where I just take my 100 USDC and I can trade that synthetic USDC around the secondary market very easily. And I think that's going to be an attractive model because people will provide liquidity to a model like that. Because say, you provide liquidity, you receive money on trading fees, in these like decentralized markets, but I'm not going to receive money on trading fees. I'm going to receive money where when there is little trade value and these tokens are staked in this pool, I'm going to receive those premiums. So it's like, again, it's like, say you want to get your $100 like liquid, and I'll buy that $100 immediately off you for like $95. So you can immediately get that $95 back, and then I receive like the $5 trading fee. Let's just say it's some kind of crazy. But also, while it's sitting there, if no one else is willing to buy those tokens off me, I'm still going to receive all the premiums while it's just sitting there, and then on this like liquid pool. And like so, it makes it kind of a new attractive model for people who want to like allow these trades to happen naturally too, which is really interesting. It's super complex, right?
It's complex. I'm catching. I'm not gonna lie, about 65 to 70%. I'm being hopeful, but what I am seeing is that it's completely new. Basically, this doesn't really exist at this moment. This idea, this concept on how to how to really kind of invest and keep your money safe, and at the same time just gradually growing. It's right once you guys hit market, I'm sure it's gonna be huge. We're only talking a few months away, so people save your money And quarter one 2022, give it all to John, all right?
Let's be careful here.
Let's just give it all to John, all right?
It's really important for everyone to do their own due diligence and be responsible for what they're willing to stake capital on. So I always encourage you guys, we'll do our best to be as protective as possible and try to take care of people on this autonomous system, because when it's running, we're no longer in control.
Right.
It'll be run probably by a decentralized DAO, but if anyone ever wants to get involved with this industry, it's important they learn the risk, understand that, and understand what they're getting involved with any system they use. Yeah. And it may require a lot of due diligence, but that's really important, because I know a lot of people that in this industry where it's an amazing industry, it's the future. We can't stop what's happening, and we know, no one can stop it. But there are people who give money that don't understand what they're doing, and they get upset when they realize it doesn't work out the way they want to. So even though we're trying to build a good system, we're trying to do our best to protect them, always be safe, and we're not just going to freely take money. Understand what we're building, the model behind it. We're going to create a really good marketing material to make sure it's understandable and clear, but always understand the risk. I think it's really important for anyone to, whenever you try to do anything.
Just to keep it clear for people in general, you're not, you're protecting their money from any type of error in the code and any type of error in the protocols themselves. You're not particularly protecting people if they lose their password and key and wallet.
Yeah,
you're not.
Exactly.
So
that's a whole other problem. I don't know.
That's
because. Do you want to give me your password to store for you so if someone hacks me, then you can use your password?
And then it's
keep it on your mother's fridge, or the password, and just leave it there.
Yeah, and so the other thing is you kind of the way Steady State is going to work is kind of in between a financial sector and an insurance at the same time. So in that regards, who's kind of keeping you in track? Is it are you guys have to kind of touch base with insurance policies or financial policies? How is that going to work out?
I could see 5 different agencies fighting to try to look into us.
Mm-hmm.
Our goal right now is to be as compliant as possible and try to pick and choose who we're going to be and make sure we're being really smart. We have an idea of the agencies that are going to really be the ones to us to perform our due diligence with, and we're going to focus on those ones. But who's going to come after us? God, here's the good news. I'm quite sure only one can. So we'll know when they're coming after us, because 5 will be trying to at once. And then finally, when they decide who's allowed to come after us, we'll be waiting and ready. Hopefully, it's kind of our goal. But we're trying to be very transparent in how we're doing things. Mm-hmm. We're trying to be very compliant and make sure we're doing everything right. Yeah. And that's kind of what we're trying to do. It's important to be very compliant and be very good, play within the rules. It's just very discouraging me some days where I wish the rules were more transparent and easier to follow. Right. But we're trying our best and trying our best to make sure we're doing what we can.
And at the same time, it's since you're playing kind of in between both worlds, it's which rules do you really follow? You know what I mean? I'm sure it's
not easy.
Yeah.
It's not easy. It's important just to be play with the rules you think are correct and you understand to be correct, and make sure you're consulting good help. And when the rules do present themselves publicly, you follow those. And that's kind of our goal. Is we want to make sure we're not trying to be defiant.
Right.
We're not trying to break rules. We're just trying to make a better future and make a better world for everyone around us. And I believe DeFi is going to solve wealth equity at a level we've never seen possible. And wealth equality. And so I want to be a part of making that future a reality.
Yeah.
Something I'm very passionate about potentially as a long-term future is universal basic income. And I believe everyone should make money. I think this is an opportunity for us to actually receive that in a way that makes sense and is actually feasible. And I really want to see us reach that. And I think crypto can help us reach there. So I'm here to bring this future to everyone for 2 reasons. Everyone can make money for existing, and 2, you can make money, and you can make more money, not just from existing, but doing what you love to do. Imagine wherever you are in the world, in whatever you can choose what communities you want to be a part of. Join those communities naturally and start contributing and get paid for contributing to things you love. If I want a job as a management consultant, let's say at Accenture, I have to start in college, get my finance degree, then get this background here and get this background, and end up at Accenture. And then it turns out I want to go to Goldman Sachs and I have to go here, or venture capital, and work here and get here and get here. There's a whole pathway and trajectory and a very hard outlet for anyone. Versus in this new world, if you want to make that extra income, you can just go online, read YouTube, and then join this industry and just provide value. If you're providing value, you just naturally get paid or accumulate, and that's what I think the future will look like. And we're bringing that future forward to everyone, and that's why I'm on DeFi, and I'm excited to build this. Is I want people to look at DeFi and say, is it safe? And if we can say it's safe, they're going to get involved and realize, oh my God, I can be involved with music DAOs, or I can be involved with financial DeFi stuff or NFTs and just bring a new future and get paid for doing what I love. You can get paid for doing a podcast full of a bunch of other people doing podcasts. That's insane to me.
Yeah.
Like, you know, at levels you've never seen before. And the future, closer we get there, the better for everyone.
Mm-hmm. So touching a little bit on that, especially for creative individuals, the new thing is NFTs. Are you able to shine a little bit of light on exactly what that is and how people are kind of basically selling their art, selling music through it, and just how that whole concept works a little bit?
Well, there's this great guy, I'm going to shout him out right now, that I would suggest you to talk to more closely than myself. He goes by on Twitter called Koopa Troopa. Very talkative. He's an expert on this industry, and I would talk to him. But I'll do my best to talk about NFTs and these DAOs. NFTs stand for non-fungible tokens. What it's supposed to mean is like some kind of like line of code that's proof that only this line of code exists that can project this value or this image, let's say. And the idea is for that code to be able to be proof, saying this is the only code that exists, and like in this likeness created during this time, to suggest that to produce some kind of image or output. Yeah. Currently, how we understand these outputs is by art. So whether it's these Bored Apes, I think is what they call their crypto punks that like Jay-Z's buying, or it's basically art showing that like there can only be one of these because it proved that it was only produced during this time, has this specific code, has this specific design, and it makes it immutable and only one available, similar to how art actually works. Right. Now the next step for NFTs and where they're supposed to go is utility. The thing about these arts is I can't walk around with the Mona Lisa and show I have the Mona Lisa and there's value. Versus I can eventually walk around and say through an event where only CryptoPunk people are allowed. You can provide proof that you actually have the only one of the few CryptoPunks actually real in the industry and be able to go to a party. Or if people hold this token, Gary Vee I think just did this. Gary Vee did the same NFTs. For people with these NFTs, you got unlimited access to all these events, and then you had a limited available. I think it was like 1,000 or 2,000. And if you have one of these NFTs, you can go to any of these events for free, and you can buy and sell and trade that. It now becomes like a random piece of art that can say I own this just from this period of time. I can prove its value and then provide its value wherever I go. And that's what NFTs are. It's just something unique that's yours that no one can replace. I can go ahead and scratch an NFT. It does not mean it's mine, and I cannot prove that it's mine long term. That's NFTs. The reason why I can't prove it is because if someone's going to evaluate the code, they know it's not the original one. You can know it's not the original same Mona Lisa. But like maybe you don't. The Mona Lisa could have been stolen years ago and burned. We have no idea. But we can go back on this and look at the line of code to prove that it was made this time, this area, and this point in period, where we know that's all there is. Yeah. It's like this is mine, I own it. Right. We get insurance on the idea that we have the rights to our house. Okay, we have rights to our house. Imagine a system where we just naturally have the rights to our house as an NFT. You could literally destroy a whole industry. Yeah. Or totally disrupt it. That makes hundreds of billions, like probably $100 billion industry, just totally, if NFTs are something to go over mainstream. Yeah. Because there's no need for it anymore. We now know who owns the house at all times. You can't just hack and steal the code. You can't just copy and paste that code and say it's mine now. It's just there, existing on the chain. Yeah, just the technology is just amazing in general. You know what I mean? It's just in all aspects, just crypto in all aspects and how it's being used, how it already made international money transfers, like from the SWIFT system to like now everything. It's so much better in such a little time. It's ridiculous. You said something in regards to people making their own money with DeFi. And specifically mentioned, can make your own money with podcasting, etc. So give me an example on how someone, day to day, someone you did music before. Let's say you want to do music and you want to make money off of DeFi, off of Decentralized Finance. How would you go about it? Let's say you want to do a career switch. Steady State was good, and now you're like, I'm going back to music. For finance, I can speak to this very clearly in the finance world, is there are a lot of these different protocols that run, and they're run by anonymous people, and no one knows who these people are. You don't have to have a background in Goldman's now to work at $1 billion DeFi protocol. If you walk in and, you get involved with the system, you contribute value, you can walk in and they'll start paying you to contribute value. And there's a real opportunity here where you're no longer judged for where you went to school, the color of your skin, your gender, anything. You just walk in anonymously and provide value. And that's what I mean is, like, if someone wants to build synthetics, okay, is a derivatives kind of crypto model in the industry, it's a brilliant concept. I can YouTube, I can see how they run things, see how it works, YouTube how it works, and then walk in and build products or ideas like I did randomly posting random finance. Right. I got paid for posting random things. People would use them and then pay me and vote on and using it. Mm-hmm. And you get contribution, paid a contribution for just the value you produce in industry. Right. Or a protocol. When it comes to artists or podcasts, you have to work really hard. Okay, let's start here. You have to work really hard in general, on a full-time job, and then do a side-time job on a podcast, which is really another full-time job, and have to work really hard on both to produce, to try to get this side job that doesn't produce any value for you yet, but hopefully will produce some kind of value long-term, and get an output where you're doing what you love and have a little more freedom, and to express yourself. And so what would it mean, okay, if we'll start here, if say everyone has a level of value that they're naturally contributed to, and say you can be involved in all these different kind of protocols at first, and then you can build like passive income really easily, from building all these different trading models like I did, all these different protocols, suddenly people are paying you naturally for using your models. Okay, that's one way how I was able to make income. But like for you as an artist, if I'm producing music, I can place this music as like an NFT, okay, or something like that on a DAO or a system, and post it to be bought or exchanged naturally. Versus I have to put this on Spotify. You can say you get the original one here. Another thing is you convince people to actually be a part of your ecosystem. So imagine a podcast. Okay, your listeners can make money from advocating for you. Mm-hmm. Audience network. Actually, again, he's a better person to talk about this than me. It's that Koopa Troopa guy. Mm-hmm. He built this thing called Audience Network. He's part of the community that built this, and basically, artists or podcast owners can post out content, and people can buy a portion of the value, like a token of the content artist, and they help distribute, like they become responsible for helping distribute your content everywhere, and they receive a portion of the revenue based on the token value they have. So if you distribute 50% of the revenue generated to your community, let's say, then the community they can buy those tokens and receive like immediate capital build, but also the passive generate revenue. The more your system grows, they receive a portion of that. Mm-hmm. That's a great example where you can produce content naturally and people work together alongside to build that. Combine that with a system called the DAO. The DAO is this unique system, this decentralized autonomous organization is what it stands for. I think this is the next big thing. If you want to think about DeFi was last year, NFTs this year, DAOs next year, that's my view. But these are organizations that come together, again, anonymously, because DAOs are what build DeFi and NFT communities. And it's now going to be like the highlight, realizing this has been building it all along, is, it's a bunch of people that are going to come together to produce some kind of value. And they try to produce something, and they maybe combine capital or something. Mm-hmm. So you combine this idea where you can release a token, let's say, to your community, and your community can uplift you. Combine that with the DAO, where these communities can now come together and combine capital, take all their tokens and put into a pool, and then everyone gets a portion of every podcast owner. Let's say you're in a DAO with like Joe Rogan, yourself, and then some other famous person, and you guys are all portion revenue. And these communities that receive a token, like of all your tokens, let's say like in a massive pool, will come together and try to promote all of you guys. Because the more they promote all of you guys, the more revenue they generate as community as supporters. It allows you to support your community, your community support you in a way that you've never seen imagined.
What's up, everybody? This is your host, Edison. Thanks for tuning in to the Questionable Behavior podcast. Please don't forget to leave a like, subscribe to our channel, and also hit that bell on your way out so that you get notified for every new episode. Thanks again for tuning in. We couldn't do any of this without your help and support.
Right. So it's almost like you're creating your own profit sharing, like almost like your own stock in a sense right away. You're giving here you go, here's a percentage, you push my content, and you'll get a percentage of my profit.
I can get paid for listening to you, and you get paid for me listening to you. It's like, it's a win-win. Yeah. And this is the future. We're gonna get paid for doing what you want existing. Yeah. And the more valuable what you do is, the more you get paid. Like, I believe cryptocurrency futures, you're gonna get paid for existing. And I think it's going to be pretty valuable long term when we actually see that. And it may not even be me working with the director. I can be involved with the DAO of 50 people or 1,000 people or 100,000 people across the world that receive a portion of a bunch of podcast owners' revenue who now listen to everyone and generate revenue, and then they generate a portion of the revenue back. It's a kickback, and it's like, it's happy for everyone. Happy days.
John, I see you're first of all, you're extremely passionate about what you do. So I'm not surprised at all your success, especially after talking to you now. And I can't wait for this, for everything to launch starting in the first quarter of 2022. I'm definitely going to be paying very close attention. I hope everybody at home is also going to be paying attention because we've received a ton of information from you here. So I appreciate you coming on the show. Before we close out the show, do you have any closing statements, or in general just let people know where to kind of see all the information about Steady State and how to, keep track of everything and waiting for your launch?
So we have a website, Steady State Finance, and a Telegram and a Twitter, Steady State DeFi. Last statements I want to kind of give to everyone is this is a brand new world being built around from you. It sounds crazy. I know you guys are busy. There's so much going on, so much to learn. I knew that. There's a lot going on. I'll be the first one to tell you that. It's really important to start trying to find ways to pay attention in the space, because this is going to transform how everything works. It may not be you, but it'll be your kids. And the earlier you get involved, the more positive outcome you can get for yourself and maybe a future generation as well. And so I really think it's important for you guys to learn about the space in this industry, because it can transform how you work, but it's definitely going to transform how your kids and your grandkids work. And it's important to be able to preserve that wisdom and learning across the board for generations, so you can be ahead and create opportunities not just for yourself, but for your future legacy.
So with that being said, can you lead people to like where they could basically go and start learning the beginnings of DeFi and everything, and how to start?
I would start with Bankless podcast. If you want to learn about another podcast, the Bankless community, I think, is very, very solid for learning about DeFi. I would also start with obviously the Bitcoin white paper if you're more of a academic, you like to read. And I would also start with looking at some major protocols. I would say Uniswap, SushiSwap, and how synthetics and let's say Yearn Finance, Compound Aave, a bunch of different protocols. Just start looking at the history about how these came together. And you're gonna start seeing how these start coming together. One thing I'm learning very quickly is I can't keep up with the space. I already know that, and I keep accepting it more and more. I was talking to an advisor. He brought up 50 protocols I'm now looking to partner with. I had no idea they existed this morning. Like it's like, what the heck? Like,
it comes.
It's hard to keep up, but just start paying attention and learning, and start getting exposure, and you'll catch up very fast, and eventually start using it, just for the sake of using it. I had a lot of guys I've talked to that tried to act like they know the space and learn it, and we had one guy, he didn't start really learning the space until he started using it, and now we have phone calls, and I'm like thinking 3 months ago, like, wait a second, you're the same guy, because he's like on my level. He's nothing better than using above. Twitter is a great way to do it, and keeping a Twitter and just following crypto Twitter. It's alive and well. Bankless podcast and these original DeFi protocols, learning how they came together. I think it's a good way to start.
Mm-hmm. All right, John, thank you so much, and everybody at home, please make sure to check stay tuned for quarter one of 2022. That's it's going to be a big platform launch, and it seems like it's going to change the whole spectrum of DeFi in general. So make sure you guys follow Steady State. Do you guys have a mailing list where people can kind of sign up, or not yet?
Yep. Attached to our website, Steady State Finance, is an email list you can get hold of as well. We'll be announcing stuff on and off there before we're full-time DAO. So then the DAO can run it. There's opportunities for you guys to be part of the DAO too when that launches next year. So
there you go, guys. Make sure to pay attention to Steady State, and also don't forget to subscribe. Follow us on all the platforms. Just Google The Questionable Behavior, and you can find all our content online and our own website at qbmediagroup.com. John, thank you again so much, and shout out to Tony for linking everything together. All right, John, thank you so much for everything, and appreciate you coming on the show and giving us a lot of knowledge and information. Hopefully a lot of creatives that follow along can kind of take some of this knowledge and start making money and investing it towards their music and everything.
That's right. Take care, Matt, guys.
Thanks.